Hello, it's Adil Fazal again, bringing you a review of the European markets for the trading session Tuesday, the 21st of January 2020. Okay, so where should we start, folks? Where should we start? Okay, so basically overnight the futures are down on the back of the China virus fears. Okay, Shanghai certainly negative, and obviously that's spooked European markets as well, but the FTSE gapping lower. Okay, European equities certainly gapping lower as well. In terms of fundamentals, hard Brexit fears have already been there. Obviously that's certainly put a cap on the FTSE. This morning we've had economic data out of the UK. Basically, wage inflation higher than expected, which obviously negates the possibility of the BOE obviously cutting rates, and that certainly has helped sterling. So let me just show you these charts to give you an insight here. Okay, be sure to visit my website there, and also follow my Twitter feed as well. Okay, so my Twitter feed is there at trader_Adil, and then you've got my website inter-market-analysis.com, and be sure to follow me there. Okay, so let's just move on to the actual charts here. This is exactly what you're watching this video for. Okay, so FTSE 100, as we can see, daily chart certainly negated the bullish candle from Friday's trading session. As you can see here, key resistance on the weekly chart basis as well. Okay, so the next key resistance was 7790. We had this topping tail in July. Okay, the market certainly has failed, so it never had the ability to surpass that or exceed that. Okay, so the FTSE certainly has been helped by US equities, obviously pushing higher on the back of expectations of a rate cut as well. That certainly has helped the FTSE 100, so bear that in mind. Now, moving back to the daily chart, giving you more of a micro perspective here. Daily chart certainly flushing lower. Now, we've got a lot of support around this 7540 zone, okay, and 7530 zone as well, so watch out below in terms of support. Now, the 60-minute chart, obviously we flushed from that 7690 or 7680. Now, the 60-minute chart has a lot of support as well here around the 7550 zone, so looking for a potential bounce, which we're certainly observing right now. And obviously German ZEW numbers certainly came in much stronger than expected. That certainly is helping the risk sentiment to potentially turn around. Now, there has been a threat with regards to the actual digital tax. Yesterday we did have some good news that there was a potential truce between Macron and Trump, but the US have threatened Italy and the UK now as well. If they were to go ahead with the potential digital tax, then there would be repercussions, and therefore will be tariffs placed on those countries as well. So certainly not positive news for the UK. Either way, that's the status, that's a scenario. There's a lot of variables at play at present, but the main one is the China virus fear, so keep an eye out for that. Okay, 10-minute chart, we've gapped lower yesterday, closing around 7650. We're down almost 100 points today on the back of that China virus fears, and obviously hard Brexit fears as well, and certainly has been exacerbated to a large extent with the economic numbers from the UK, the manufacturing numbers, and also the wage inflation or wage numbers as well, which obviously negates the argument for a potential rate cut, which again is potentially hurting the FTSE to a large extent. But given the fact that we're down on more than almost 100 points now, a lot of the bearish news certainly has been baked into the cake. Stronger jobs and stronger wage inflation generally is positive for the markets, but given the fact that we live in a QE world now, and money tends to flow towards that zone. Okay, so I'm not going to rabbit on. Moving on then, European equities. Okay, let's quickly move on to European equities. Now, the French CAC certainly did break out, potential fake out now, so bear in mind. Now, a lot of individuals will now potentially be looking for a H&S formation. Now, we do have the ECB this week, so again, just be careful. Don't get too bearish from my perspective. Okay, let me just draw this trend line here. Go on a second, let's just have a look here. So let's give you an insight in terms of the market itself. Just connecting these diagonal trend lines. So again, a lot of support here. Now, if that was the head, okay, so from my perspective, this is what I'd be looking at now. Head, okay, pivot high 6113. Any potential retrace bounce, and then looking for a flush down to gap fill below us 5885. Poses a very, very interesting scenario here now for European equities. Now, we've had this diagonal trend line certainly being obeyed for quite a while now. Okay, okay, so diagonal trend line certainly is being respected. If we were to follow the potential pattern now of pivot low to pivot high, retraced around 38% and rallied, pivot low to pivot high, retraced around Let's have a look here, around 50% then rallied. Now if we take the pivot low to the potential pivot high, if it is the pivot high, and again if, okay, looking back to retrace back to 38% or potentially even 50%, which is the gap. Now again, a lot of that will depend on the coronavirus. If China virus certainly exacerbates and gets worse, we are seeing reports of it reaching Taiwan now. That obviously will trigger further risk aversion. A lot of the luxury sector stocks certainly have been hurt, like Burberry and others, okay, LV, if I can recollect, Louis Vuitton. So a lot of those certainly are being hurt on the back of that. Okay, so let's just see how this market unfolds. Again, this is hypothetically speaking. It doesn't necessarily mean that it will play out that way. The market could continue to push higher, make new highs in the French CAC. So again, trading is all about possibilities. Now moving on to the 60-minute chart, we certainly are coming into support now. Now there's a key diagonal trendline resistance around this 6065. We hit a pivot high of 6110. Obviously the market's retraced. We've hit a pivot low here around the 5994, retested below there. And now looking to potentially, if we do rally, looking to close the gap above, which is around the 6070 zone. So there's a lot of support here around this just above 6000. If that obviously fails, then going back to 5980 and going back down to 5960 on the 60-minute chart. Now the 10-minute chart on the French CAC, let's see how this plays out. Now we did actually close the gap and push even lower, so again even more bearish from that perspective. Now the 60-minute chart does have key support around this zone here, the 6010. Okay, if that obviously breaks, then we are potentially moving lower back down to 5980, and then obviously 5970 support, and eventually 5960. So let's see how the market unfolds. Again, if we do push higher on the back of the actual breakout, if that were to continue on in terms of the French CAC, then you are looking at closing the gap around 6080 above. Okay, so watch out above from that perspective. Now moving on to the German DAX, giving you a quick insight here. German DAX was weak out of all the indices. It was the weakest, given the fact that the daily chart certainly held resistance, did pierce into new highs. Okay, and then obviously the weekly chart again is at key resistance as well. Okay, so again, certainly has been the weakest link out of all the European equities. 60-minute chart on the back of these ZEW numbers. Now keep an eye on those stronger German numbers. Okay, ZEW certainly came in stronger than expected, and certainly does bode well for Germany. And let's see if that's a catalyst for the potential breakout, or if the China virus obviously puts a stop to potential Chinese disposable income consuming German exports. Okay, so again, let's have a look here. 10-minute chart. We've got unfilled gap above around the 13,550. We've got an unfilled gap below at 13,430. So it certainly seems to be the battle of the gaps. But we know that 13,550 certainly has been solid resistance on the German DAX. Okay. Right, okay, so I think that's a good summation really of European indices. Be sure to obviously follow me on Twitter, and be sure to visit my website, and again, keep an eye on my YouTube videos that will be done on a daily basis. Goodbye.